Welcome to Wisconsin Capital Management's Beyond the Balance Sheet, the podcast where inspiring stories meet thoughtful financial insight. And I'm Aaron Carreno alongside Nathan Plumb of Wisconsin Capital Management. Great to see you again today. And today we're turning the tables just a little bit. Usually we interview business leaders and entrepreneurs along with community leaders. But today we're sitting down right here with the person who started it all here at Wisconsin Capital Management. Joining us is Tom Plumb, founder, CEO, and portfolio manager. Tom, welcome to the show. How are you?
Pleasure to be here, Aaron. Nate?
Fantastic. Well, we got a lot of questions for you, and we're going to gain a lot of insight here today as well. You're the president, Tom, of Wisconsin Capital Management, and you've been in this industry for 40 years. So what financial decision do you remember making before becoming a professional portfolio manager?
Well, my first most important decision was to go to college. I was working as a welder at a steel fabrication plant. I went back to college part-time. I was already married and decided that now I would go back full-time. And so pursuing what your real goals were, even though it was at that time not perceived to be a very good financial decision, that was probably the most important one and the most influential to the rest of my life.
Yeah, I had a question for you too. So, and you've been in the market a long time. Is there any particular market event that was really kind of transformational or educational to you that you'd like to share?
Well, that's the good one. And after 40 years, there's been a few of them. But of course, the first one is always the most important and makes the big imprint. So in 1987, there was a new chairman of the Federal Reserve Bank. And what we saw was all of a sudden the market started to implode. It was called the crash of 1987. I think that the biggest lesson from that was that markets recover. As dire as it seemed, because interest rates were going up and we were talking about a stagnant U.S. economy, all those different things that caused the market to go down, lack of liquidity, fear of the unknown, everything that you put together. But within a year, we were back to break even. So even though you go through those events, it taught me that markets can recover, and when you look at the trends over time, you see that little bitty blurb, 1987, but I can tell you, living through it, it wasn't a little bitty blurb, but it was a great lesson.
Tom, with that in mind, how has your investment philosophy changed over the years?
Well, I think when people go to college and try to determine, we looked at a lot of the publications that were done in the 50s talking about how to succeed in the investment markets. They emphasize value, looking through, trying to find the companies, Warren Buffett, Graham Dodd, they came up with ideas that you could actually buy companies at below the value of their underlying assets. That was the underlying philosophy that a lot of us were, it came pounding into us. What you realize over time is that the growth of business, the growth of the U.S. economy, and finding companies that could grow faster than an economy that has historically grown at about 3 to 4% a year, plus inflation, so about 6%. If you can find companies that have tailwinds, that have growth, have the ability to execute, they can identify in markets that you couldn't even imagine 10 or 20 years ago. And so the biggest change was to understand that you needed to see the catalysts and look for a growth opportunity and understand that companies grow their revenue, they can grow their profit margin, and when they do both of those things together, they end up growing the relative price that people pay. We call it the PE ratio. But a company that maybe is not growing so much, trading at 8 or 10 times earnings, all of a sudden you get the growth rate of the revenue you increase the margin of profit, and all of a sudden you start trading at 20 times earnings. So that's where you really can make some money in the stock market.
What do you think individual investors have kind of constantly like misunderstood over time that you think that would be educational for our listeners?
Well, I think the biggest thing that we see, and you see, people anticipate, oh, I can take this amount of volatility or this amount of risk. And then when you're in those times when you're being tested, you find out that maybe I can't take as much of that volatility or risk as I thought. But I think the biggest thing is to not mistake volatility for risk. And the way that risk or volatility becomes risk is if you have too much money in something and you're forced to sell it. A lot of times when the stock market goes down, I hear people say, I'm going to lose everything. Well, you don't lose everything very often. You do if you have a company that basically fails. But you can lose a significant amount of your net worth. And if you are invested in the wrong companies, you may not get the recovery on that. But if you invest in good quality companies, and quality is an overused word in our business, I think you can find that those types of companies that show that volatility but still have the underlying fundamentals working for them, they will recover. And so you actually can see how you mix up that volatility with risk. And when you understand what you own, and that's one of the reasons why Nathan and I spend so much time on understanding what we own, because then we don't convert that volatility into risk.
It's really great feedback and information. And, thinking back to your life, when you're a young father and husband, what financial decisions do you remember making specifically back then?
I had decided to try to learn as much as I could after college in the industry that where I could lay some foundation. So I worked at trust investment departments in Sheboygan and Madison here. And the biggest decision was with 3 children starting out, still having student loan debt, but feeling that we had the potential, I started this company. And so that was a big risk looking back at it. I'd have to tell you at the time I understood it was a big risk because I went from earning an income to earning no income and having these dependents with me. But I think that that was a big decision to invest in myself, believe in myself, believe in what we could accomplish, and to actually start this company.
Yeah, I remember being little. This was in the old Pie Square building, this round building that doesn't exist anymore. And it was a circular building. It was really odd to have furniture in it. And then my dad had clients coming in, they're signing investment contracts on cardboard boxes. And I still remember that as a wee one. So it was pretty humble beginnings.
Yeah, we had boxes and our computers came in, but we didn't have desks and furniture yet.
Eventually you get it, though. That's all that matters, right?
Yeah.
When you were, as you've been going through your career, Tom, what kind of conversations with clients have you had that made the biggest impact on you?
Again, I think back to the first time that something happened, it's always the biggest impact. But I had a client up in Eau Claire, Wisconsin, who was an industry leader and somebody who I knew I respected, but also all of his colleagues and everyone in the community. He had been diagnosed with a terminal disease. Initially, he then flew all over the country to talk to experts to see. Then we met after he had realized that it was terminal and there was not an avenue out of this. And to sit down with him and just matter-of-factly talk about what he wanted done, what his plans were, his time, and things like that. But to talk to someone about that type of a situation made me realize that, one, it would be a lot easier talking to people before they came to that situation, but that you had to kind of be level-headed, understand these are specific things that you had to do in this circumstance, and understanding that a lot of times people are, going to face some pretty difficult times in their lives, and they expect us to be the level head to talk to them, to, they didn't need just somebody saying, oh, that's so bad. They needed somebody to say, well, what do you want to do? What can we do to help you reach, the goals that you've set in life?
Yeah, even when you face those personal challenges, you still have to have a succession plan. I think that's important to have that in mind, right?
Yeah.
Absolutely.
I just in general, open question was, it's like, what do you feel is the best investment you've ever made?
Well, you could say, well, I bought a stock that went up or down. But, the best investment is really to invest in yourself, invest in your family, your friends, understanding what's important to you, and then making sure that you put that as a high priority. Sometimes it pays off from financial terms. Sometimes it pays off just being able to sleep at night. But that's the best investment somebody can make, is invest in themselves, into their family, their friends, and making sure that they're true to those investments.
So, Tom, when you look back on your career, and you've had a very lengthy career, you've had many conversations. What do you hope that you're remembered by, and what people talk to you? When people talk to each other and say, Tom had a big impact on me and my family, and maybe Nate and the clients. What do you hope that people say about you?
On a daily basis, Nathan and I look at the stock market, look at the bond market, look at investments, but that all has to be something you're applying to what you're really doing. I hope that people will remember that we've tried to do the best we could for them, that we have developed some professional expertise, but that we used it to apply to their specific situations. I hope that they remember that we tried to be what we call true fiduciaries. By that, I mean, you're not just saying, oh, this is a good financial decision, but you're actually trying to put yourself in their shoes, say, what would they want? And then what can I add to help this be accomplished? And I hope they feel that we've dealt with them with integrity and honesty. And I don't know if there's much more.
I think, Nathan, you could maybe ask Tom the final question here, because maybe you've got more insight to this as a family member than I would here.
Add the tough one here at the end here. So theoretically or hypothetically, if you could go back 25 years, and you're a 25-year-old Tom Plumb again, what's the one piece of advice that you would tell him if you could revisit yourself like in a time machine?
That's a tough one. I think, if I went back 25 years ago, for me, isn't that long ago, Nate, compared to some people making their decisions. But I think that, there was a lot of self-doubt. You start thinking, somebody, this person, they must know more than me. They're older. They've got, this education, this degree. They apply this certainty, but truly trying to understand yourself, what your strengths were, what you bring to the table. I mean, obviously, I felt some confidence in doing that, but I know at certain other times I didn't feel as confident. I think that as you go through, there's different business decisions and things. You say, well, I thought that this partnership would work out better than it did. But I do think that the most important thing is just understanding and trying to always understand what's important to you as an individual. And I always remember a John Elway quote when he was talking to young football players. He said, don't ever let what you want most this moment interfere with what you want most in life. And, trying to keep the perspective, I think, is an important thing.
Really appreciate you sharing your story today a lot. So we could probably talk for another half hour, maybe afternoon. Why not?
On again.
We'll have you on again. Tom, thank you so much for sharing your story.
Thanks, Aaron.
Easy for people to see. Yeah, easy for people to see the firm today, but getting that backstory, that vision, that perseverance, if you'd say, and values behind this story makes it really meaningful. So thank you so much.
Thank you.
Thanks for listening to Beyond the Balance Sheet. And if you enjoyed today's conversation and would like to be a guest on this show, then visit wiscap.com and send us a message, or on Facebook. And until next time, remember that behind every financial decision is a story, and that's what we're here to explore. Thanks for listening to Beyond the Balance Sheet.